Hello everyone, Maurice and welcome to Tanks Invest, talk about investing, finance, pressure development. For today's video, 8 terms only. The investment I'm going to talk about today will be Ethereum ticket ETH. First, just want to say happy Friday, everybody. Hope you had a great Friday and a great week so far. With respect to some recording around 9:50 a.m. on the Eastern time right now, Ethereum is currently trading like the $1897, down about 2.68%. And with respect to the recent media affectation in the last 12 hours so far, collectively speaking, I would say we do have a couple of negative media affectation with some neutral tone type of news as well. And just to keep tabs, some of the news includes a comparison news come from Decrypt on Cardano's Alonzo rollout and its juxtaposition in comparisons to obviously Ethereum and Ethereum 2.0 going forward. So it's more like a value proposition type of comparison, if you may. It seems like with respect to the article, the verbiage and the adjective that the author used is definitely leaning more toward a positive spectrum towards specifically Cardano or ADA. So obviously everybody have their own point of view and everybody have their own specific bias. So I guess we collectively, us reader as an investor, reread it, we learn something from it, but we obviously take that with a grain of salt by, obviously adjusting for all the bias or specifically subjective type of adjectives in the verbiage in the essay, right? So something to be mindful of. Another one that we got was with respect to news from CoinDesk, right? And this is more of a reinforcement of an old news, right? With respect to blockchain protocol, 4chain loses 4,000 Ether in a cyber attack that happened recently, right? So obviously this is it doesn't really have to do anything specifically with Ethereum, but it obviously raises an issue with respect to like cyber attack or cyber security, if you may. Especially we are holding these assets, and to be hacked and to have that vulnerability definitely raised some red flags across the spectrum. So it's more like a macro negative news. So with respect to this morning, we are seeing a little bit of a sell-off across the board, but not really. I think by one point at 7:55 a.m. Eastern time, when I was still at the gym earlier today, we sold down all the way to the resistance level that we identified, the $1850 level, and subsequently rebounded. And I think the rebounds because of the anti-correlation effects that we're driving from the equity side. If you look at SPY and Nasdaq right now, it's kind of hovering away, but it's leaning more propensity to drop because of the fact that, like I told you, the technical analysis, we are seeing more of a sell-off coming, especially on the growth stocks specifically, because they get hit the worst in comparison to more stable stocks or like larger blue chip stocks, if you may. So this is something that we have to be mindful of. And also on top of that, today is Friday, which weekend affectation do raise from, again, right, basically around noon or 1:30 p.m. Eastern time all the way until on Saturday around like 4:30 p.m. to 5 p.m. That's like the typical whack affectation of a sell-off, contingent on no black swan news or no negative news. That's like the last consecutive weekend occurrences, and these are always comparable trades that we have depicted, and then subsequently rebounded on Sunday, but with obviously a black wild card on Sunday to have no black swan news either, right? I'm gonna go through technical analysis to see how we're shaking out going forward, right? It seems like we're testing or consolidating around like the $1,900 level. But with respect to the chart, are we gonna see more of a sell-off? Or are we gonna see more of a pump going forward? So stay tuned, stick around. Let's make some money. Alright, so moving on to the technical analysis for Ethereum ticket ETH. I'm recording this of 10:11 a.m. on the Eastern time right now. Currently trading on like the $1902 level, down about 2.42%. And let's take a look at the equity market real quick to see how it's shaking out. Okay, so you can see that we're kind of hovering right now. We're not doing much. We're down about 0.09%. And with respect to Nasdaq, we're down about 0.03%. But even though we are kind of hovering, I do see some sort of a sell-off coming. And I think we are just like calm before the storm right now for equity side. I think the correction seems like it's definitely going to be happening because of how stretched the MACD and the RSI is right now. So again, not a financial advice. I'm just a YouTube person that's talking to you guys. I'm just a friend, giving you something that I'm seeing, my observations, and I'm not in no power to obviously tell you what to do, right? But this is just what I see, right? With respect to SPY, is down a little bit, but I do see some sell-off, especially the fact that MACD is slowly crossing right now. If you look at it closely, we are fusing together, and with a high propensity to actually leap down especially of the fact that RSI is supporting it. We are pretty much leaning more toward the overbought level. So definitely, shorting the SPY or the Nasdaq would be something that I would ideally want to be doing. That's just my point of view. And with respect to Ethereum, Bitcoin is not doing much today because there isn't really anything specific that is correlating with the media affectation perspective. For Ethereum, we're down a little bit because of the negative news that we had. We will also have the anti-correlation effects that's kind of baking in with respect to hitting at one point around 7:55 a.m. on the Eastern time this morning, hitting the exact level that we have identified, the $1850 level, or to be more specific, 1849.66 per the chart that you see in front of us, right? So again, I'm not a wizard, but it's just a level what the chart is telling me, right? Because these levels here is basically based on my diligence on understanding how it was looking like historically and what are the momentum that was trending historically, and then I identify these key resistance levels to dollar cost average, right? And that's how you're going to be able to maneuver through the risk profile that you're getting, right? And now let's take a look at the specific risk profile at the current state right now, right? So right, per our discussions earlier in the previous consecutive videos, we know that the 1850 is the resistance level, and that's why we rebounded because of the anti-correlation effect, on top of the adjustments from the negative news that we had earlier today. But it's more like a mixed bag, right? It's more of a neutral news. It's not like something that's so seismically negative that we subsequently rebounded, right? And also on top of the fact that we are kind of selling off right now, so we're kind of hovering above the comfort level, again, the 1900, right? So with respect to the weekend affectation that we should be expecting based on just the last 7 consecutive weekends so far, right? This will be the 7th one, the last 6 consecutive weekends so far. The depictions is always around, selling off, 3 hours before the equity market closes, right? And then subsequently rebound by Sunday, right? And I think it doesn't technically rebound by Sunday. It rebounds by Friday. No, not Friday. On Saturday at 5:30 p.m. Right? And then subsequently rebound on Sunday and recuperate. And Sundays has typically been more of a green day if you don't have any occurrences with respect to black swan news, right? So I think the likelihood of actually coming back down to the comfort level, again, the 1900 is not really a comfort level, right? 1960 would be the next leap up. Do we see more of a pump to 1960? I think maybe by Sunday we will be, but not in the next 2 days, right? Because of just historical predictability, right? Like you can only make a substantive prediction based on historical trends, right? We are not wizard and we don't predict the future, but we can identify historical traits and project the future characteristics with historical characteristics, right? So that's something that I foresee will be happening. So getting down to 1850 wouldn't be, not logical to me. I think that's pretty logical based on how the chart is set up, especially the fact that we crossed down on a MACD perspective. But the good thing is the bottom is pretty much almost there because we are pretty much oversold on the RSI level right now. So congratulations to all of us. I don't believe we will actually get down all the way to below 1700, or I think 1750 would be the bottom. I think based on how the chart is set up right now, right? RSI can only go down to a certain level, right? You are basically at the earth crust right now. We are basically drilling holes right now into the ground, looking for oil right now, right? And by a certain point, you're gonna get deep into the ground that you're gonna keep digging and digging. You're gonna hit the magma, which is the lava and the volcano zone, right? And by then, the pressure is gonna be so high that the volcano will erupt and you'll basically pump back up, right? So 1850 would be ideal level to dollar cost average, right? And I think these are the levels you want to be buying ahead of the summit on the 21st, right? I hear people saying oh, we're gonna hit 600. That makes no sense to me based on how the chart is set up right now, because for you to hit 600, RSI has to be basically in negative zone. You basically have to drill the holes into earth or into ground all the way into the core of the earth, which doesn't make any sense. You know what I'm trying to say? So RSI is very depleted right now. MACD is supporting it, that we just recently crossed, 1850 would be ideal. I think this weekend we'll get there, or we got there already. 1750 might be the worst that we could get, and then we'll rebound from there. And that's just a normal course of oscillation, and that's how the RSI is going to be shaking out, how the MACD is shaking out. So those are the levels to risk mitigate and dollar cost average wisely going forward. All right, just to recap all the numbers in the technical analysis again, right? The 1960 would be the next level leap up, but at the current level, I think it's pretty attractive, to be honest with you. 1900 is not a bad number to buy at, right? But with respect to the weekend affectation, we might get back to the 1850. Or if you got to 1850 early this morning at 7:55 a.m., that's great, you know. But I was away from my phone at the time, I guess. Do we see 1750? We might, because of the fact that we are crossing down on the MACD perspective. But a good sign is because the RSI is pretty much depleted right now. So I think the likelihood of the bottom would be 1750 ahead of the summit, and that would be the worst. I don't see going below 1700 because that will be pretty. It wouldn't make sense in the supply and demand logics in perspective, right? It just doesn't make sense. You wouldn't be going that way based on how the chart is set up right now. With respect to corporate adoption, 20%, 9,800, 5 times your money if you buy at the $1960 level. All right, so that's it for today. With respect to my technical analysis on Ethereum ticket ETH. For Friday today, I think I'm gonna be watching out because I'm gonna be staying home the entire day. I just have a couple meetings from like noon all the way to 4, so I'll watch the market. If we see anything funky going on, I'll come back to the camera to revisit the technical analysis, to revisit the chart to see how we're trending and how we could risk mitigate going forward. But really appreciate you guys for dropping by, and have a great rest of the day, and stay tuned for the next video coming up. Take care. Bye.